Welcome back to my channel, fellow investors. In this video, I'm going to be covering REITs and specifically three REITs that I'm looking at to add to my income portfolio since they pay really nice dividends. The three REITs are Digital Realty, Public Storage, and Beachy. These are good quality companies. I've done my homework. I just wanted to stack rank them and see which one's going to be the best one to add to my portfolio. If you have viewed my channel for a while, you know that I have a growth portfolio with companies like Meta, Uber, Airbnb, really growth companies that are doing really well. And I have an income portfolio with dividend paying companies. The reason for it is as I get older and look to retire, I want this income portfolio to generate dividends and help me pay for my living expenses and have a really nice retirement. Meanwhile, my growth portfolio keeps going up in value and just appreciating, which is great. But on down years, those growth portfolios tend to lose a lot. So this income portfolio really preserves my capital and really provides good income. Now, as I look at these three companies, I wanted to tell you a little bit about them and go through a process of selecting which one's the right one to invest in. I have a process, and my process is first to really like the company. I want to put myself in the role of a part owner and really feel good about the management team that they're doing a good job. And I want to know next is the balance sheet. Is the balance sheet in good health, or is it a balance sheet with a lot of problems? And then last is the stock discounted? I prefer to buy a stock that is discounted, a great value company that is discounted. I'm also willing to pay a fair price for a quality company. Now, let me get into each one, starting with Digital Realty. Digital Realty is a data center property company. They host data centers on their properties. So a lot of companies that want to outsource running their computers and their websites and applications can go to Digital Realty and rent out space within a data center. The big hyperscalers, AWS, Microsoft, Google Cloud, Oracle, they rent out space from Digital Realty and they put their equipment in there so they could host for other companies. The company's really seen a lot of demand for their properties because the AI build out is really catching a lot of attention and putting a lot of demand on their data centers. So Digital Realty is really seeing their stock price go up and they've really benefited from that AI push. I was an owner in Digital Realty stock and I sold in 2023 with a modest gain. I didn't see the appreciation that a lot of stockholders saw toward the end of 23 and at the beginning of 24. Really good quality company with an interesting business model. The next REIT is Public Storage. And I'm sure you've heard of Public Storage if you're here in the United States. If you have some stuff that you just can't fit in your garage, or maybe temporarily, maybe you're downsizing and you need to put stuff in a storage unit. You're moving from one city to another and haven't quite found the right property to move into. There's a lot of reasons why you would go to Public Storage and rent out a storage unit to put your stuff in. Public Storage has been operating really well for a long time, and they are a very good dividend paying REIT. They've seen a nice surge over the last year in their stock price, but have leveled off for the last couple of months. They pay a nice dividend overall, and I'll be looking at their fundamentals as well. The third REIT is Vici. Hopefully I'm pronouncing it right. I'm not Italian, but I'll give it my best try. And this company is in the hospitality industry where their properties are really based around the casino concept and the entertainment around casinos. Caesar's Palace is one of their properties, as well as Mandalay Bay. And they have some of the best properties in Las Vegas. But it doesn't end there. They have properties around the United States, up in Canada, and their properties tend to really generate a lot of income. Specifically, travel has really seen a boom. Travel is just off the charts. Airlines are doing really well. I know that Airbnb is doing great. They just continue to grow. And from all measures, Las Vegas is really booming as well. It's interesting to see that Vici, their stock has been going down over the last year. And that's interesting because that makes their dividend rate even more attractive. As the stock price drops, you have a better dividend. I'll take a look at their fundamentals and see where they're at. Overall, I'm going to look at all three companies, compare them, stack rank them, then make a decision to buy one of these three REIT stocks. Looking at the fundamentals for Digital Realty, their market cap is $45 billion. They've had a really nice run up over the last year. The stock's up about 35%. It's really been supported by the AI build out. A lot of companies are going to need their space, and it's really sent their stock up nicely. And this stock in particular has a really high forward PE, which is a little concerning. 119 is a really high PE. And their dividend has come down from a percentage perspective, principally because their stock price has gone up. With regards to REITs, they tend to pay a higher dividend rate because their rules are that they have to distribute most of their net income. So it's a sign that the stock is a little pricey if the dividend is going down. Most analysts have a buy rating because AI related stocks are just super popular. And this one is in the AI ecosystem, principally because their data centers will be the place where a lot of this AI is being built. So, interesting company in digital realty. The fundamentals for public storage look good. It's about a $50 billion market cap. They've been growing over the years, so that's really, really healthy company. They continue to grow their top line revenue by acquiring more properties and running their current properties effectively and raising prices. What's interesting is I'm looking at the 1 year, not too long ago, in I guess the late October, November timeframe, the stock price was down to 240 per share. And it was an opportunity to really pick up a nice stock that rose quickly. Recently, it's been down from its peak, and it's down to about 280 a share. That makes the dividend rate 4.29, which is a pretty decent dividend rate. But REITs tend to, again, pay higher dividend rates. And this one's just in the okay category in my book. Most analysts have a buy rating. I think Public Storage is a really good quality company. And I think it's a really good stock to own over time. Now the fundamentals on Vici. The market cap is lower than the other two. It's about 30 billion in market cap. They own really high quality casino properties, entertainment properties. These guys just have really good premium properties. What's interesting is recently in 2024, the stock's just been really dropping, which is interesting. Yet all the statistics I see on travel is that travel's up, that the consumer continues to want experiences versus stuff. So it's interesting to see their stock price go down after it had a nice run up in late 2023. That makes their dividend really attractive at 5.74%. They can more than afford that dividend rate. And most analysts have a buy rating on Vici. I like this company. I've tracked them for several years, and I'm very comfortable with their business. I think it's a very well run business. And the last note on Vici is their forward PE is really low, 10.66, yet the company is growing. So just one more sign that maybe this company is underappreciated and undervalued. Now, let me stack rank all three companies, starting with Digital Realty. Their dividend rate is 3.45, and I believe they're being sold at a premium of 26%, principally because of the AI hype. Now, I do detailed evaluations of these companies, and you can see them on my channel. But I value the company, and I believe it's being sold at a premium of 26%. The next company is Public Storage, and it pays a dividend rate of 4.29%, and they are discounted at 30%. And I get that discount by looking at their free cash flows they generate as well as their earnings per share. And that's a pretty nice discount. Vici is at a really high dividend rate of 5.74%. And it actually is discounted even more than the other two, I think because their stock price has been going down. I really like the Vici business and believe that the travel hospitality industries are doing quite well. So it's interesting to see that they're very different from a discount perspective. And as you might have guessed, the stock that I'm going to go with and buy shares in is Vici. And the reason for it is that's a really attractive dividend rate at their current stock price, which I believe is discounted. And I'm catching it on a pretty significant dip. Really, it could go up in value, which could reward me in stock appreciation and pay me that nice dividend rate in the meantime. So I'm going to go with Vici and buy shares and really build up that position in my income portfolio. Real estate investment trusts are a really good idea for investors that are looking for dividends. And these three are good quality dividends paying companies that are operated really well. As a value investor, I'm looking to buy them when they're discounted. And I think I found the best discounted one in Vici. But I wouldn't be surprised if I end up buying the other two over time, depending on where their stock is trading and how well their businesses run. I hope you found my video interesting, and I really appreciate you watching.